Hello, crypto ladies and crypto gentlemen, and today I'm going to make one more video about the results of the trading system for the different cryptos, and this time we'll be talking about the Bitcoin to the USD, and the starting date of this research is 6th of August 2017. Because I have started to do it with this random date, but I'm going to make comparison with the other coins. And here we are. Here we have some results, and this is our researches, and here is the picture of the signals. So idea is that the green signals are only important for us. The red ones are just one of them. For example, here, if we're starting to find position and we're buying and buying when we have the new signals, and after that, when we have the first signal to close this position, we are closing all the positions which were opened at this moment. So it's working mostly perfectly in the situation when we have very big jumps and strong growth. Certainly we can see that there's some kind of the potential opportunities to optimize this strategy, because you see that when we have something like very strong growth, we have so it's a jump and diffusion. We're assuming the portion of diffusion. Usually it's not so big, but from the other side it's potential to optimize, but the optimizing opportunities and optimizing strategy is necessary when you have not the appropriate results. But try to see how appropriate is our results. So it's a function of it's not a function, it's just the visual representations of all the profits from all the deals which were closed. And after that we are receiving information which is becoming important for us. It's a statistical information. So we have the number of our opened positions, 305, and minimum was minus 0.58 and maximum was plus 3.93, and they are important for us for making the profits histogram, because you see that if we will try to make at the beginning something like very usual figures, minus 0.2, it's 20%, and 0.2, it's also 20% from each deal, we will have next histogram. And from this histogram we will not understand where from is coming profit. It seems that the deals are separated, that's even a little bit more deals with the small negative results. In this connection it's ununderstandable where from the profits are coming. So in this case we need to put here the information exactly received from the min-max results, so we will better understand. So for example, for the negative side it's minus 0.6, and for the positive sides it's 4.0. And just a second. And this time we will have absolutely different picture, and we will see that maybe we are achieving those results we are trying to achieve from the trading methodology, because our negative results are quite close to zero. Yes, but our positive results have the non-linearity. So we are using the most attractive opportunities on this market. For example, these figures are talking us that it's 400% for one position which were opened. So in this case you can see that it depends from the time, and we are better understanding that our results would depend from the best times. And from the other side, they are giving us information that if we will try to close our position a little bit early, we can lose a portion of capital, portion of income that is necessary to achieve our long-term goals and to achieve really perfect results in this not simple business. For example, here is the compounded percentage change for the period for Bitcoin against USD. So for this time, Bitcoin have risen 9 times 0.11. But how about our trading systems result? So here we are. It's number of shorts. The second one is the win rate. So the winning deals were only 53% of total number of deals. The standard deviation is 55%, 56% almost. After that, the mathematical expectation, 120% average. And compounded profit, the total profit from all deals is just let me say, okay, 17,000 times. Oh, excuse me, 10 times, 70 times, 170 times. 170 times. It's 17,000%. It's amazing result, isn't it? So here we have the analysis of the profit factor. As for me, the profit factor is an amazingly important measurement of the efficiency of our trading systems. Usually the profit factor, which is more than 4, is not so highly, that it's better for us to understand that if the profit factor is 4, it's well enough. Everything what is more than 4, it's absolutely huge. And in this case, in this situation, we have figure 7.5, because the total number of the profitable deals is 197 times, and the losses minus 26. And this connection relationships between those figures is the profit factor. And the profit factor is also talking us how that the emotionally negative or positive will be our trading. If we have profit factor less than 2, we will have the mostly negative emotions related with our activity. If we have profit factor more than 2, we will feel just ourselves quite comfortable. And it's also the reason for us to do we need to make any kind of the optimization or not. This time we can say that we need not to optimize our strategy. Maybe what we will need to do is just to expect the better timing on the market, because currently we can see that prices is going down in this connection when doing nothing. I have not tested this strategy for the short sell side, but my other researchers in this direction show me that maybe it's not so highly interesting to trade short, because the short side is much more complicated and much more difficult, much more quicker corrections and disconnection. It's maybe better to stay from the market in this situation when it's going down like now, and never try to make operations too early, because you know that it will be relative with the some kind of the that it will be something not the positive expectation game, but it will be the that ego game, when we are thinking that okay, we will have enough knowledge to better understand when the prices will turn from the downside move to the upside move. Trading is not about our ego. Trading is about our intelligence and about our expectations. So this is the information. Certainly these figures are not so impressive as those ones which were published for the Sol against USDF or Solana. If you want, I will state the link for the Solana to this video, and I will state it in other videos which I will make later. Before I will find the better one. I'm not sure that I will, but it will be quite interesting to have chances to make comparison between those one which is interesting for you and with the best one. Thank you very much for your attention. I will be thanks a lot for any kind of your ideas about the different methodologies for the cryptocurrencies trading. And again, I need to say that it's not recommendations for you, it's just researches, it's just for a better understanding of what we can expect from the market and what we can't expect, and which way we need to, to involve those researchers in our everyday activity on the market. Thank you very much. So it's not recommendation, it's just the thinking about this subject. Thank you very much. Have a good day. Bye bye.